The torrent of Iranian oil that's been gushing into China in recent weeks is crowding out imports from other nations and threatening to complicate efforts by the OPEC Plus alliance to tighten supply in the global market. China, the world's largest crude oil importer, is currently buying close to 1 million barrels a day of sanctioned crude, condensate and fuel oil from the Persian Gulf nation, according to estimates by traders and analysts. That's displacing favored grades from countries such as Norway, Angola, and Brazil, traders said, and resulting in an unusually quiet spot market. Most refiners and traders around the world are reluctant to buy Iranian crude because of U.S. sanctions, which can result in repercussions like being cut off from the American banking system. However, the seemingly unstoppable rally in global crude prices is making the sharply discounted Iranian oil increasingly attractive to Chinese buyers, including its independent refiners, which account for around a quarter of the country's crude processing capacity. While global benchmark Brent is trading near $70 a barrel due to improving demand and tighter supplies from OPEC+, a continuation or increase in the Iranian flows could stymie the alliance's efforts to keep driving up prices. Iran is a member of the Organization of Petroleum Exporting Countries, but is exempted from the supply restrictions. However, China's preference for its cheap crude is displacing demand from OPEC countries like Angola, as well as other producers like Norway and Brazil, although the quality of oil from all of these countries is not identical. As many as 10 million barrels of Angolan oil due for April export were still without buyers as of earlier this week, according to traders, compared with a typical month when such cargoes would have been sold out by now. Grades from Nigeria and Republic of the Congo have also struggled due to a lack of buying interest, the traders said. 3 supertankers carrying oil from Norway's Johan Sverdrup field have been floating off China for at least 2 weeks without discharging, shipping data show. Only 16 million barrels of North Sea crude left Europe for Asia in February, the least in 4 months, with the downward trend likely to continue in the short term, said traders involved in the market.